I say the Fed's going to self-destruct eventually anyway when the money's gone.
The Federal Reserve has become such an integral part of the economy that most people don't even know who owns it, or if it has owners at all. It's not as independent as you might think, and its relationship with Congress means that it's anything but democratic. Here's everything you ever wanted to know about the Federal Reserve, the Fed, and whether or not it's good for America. What is the Fed? The Federal Reserve System is a government-owned entity that operates independently of Congress, reports to no one, and has ultimate control over America's money supply. While it hasn't always been that way, and was even privately owned at one point, today it is a quasi-governmental agency with broad powers over fiscal policy. The Fed ultimately decides how much money there is in circulation, what its value will be, who gets access to credit, and on what terms, whether banks should be allowed to fail, etc. Most of its decisions are made secretly by private bankers via an international committee called FOMC, Federal Open Market Committee. Its policies have far-reaching implications for Americans from all walks of life. For example, rising inflation means your paycheck buys less stuff. Who owns it? Technically speaking, shareholders own 100% of Federal Reserve stock, since that's where profits go each year. However, no one actually owns shares since they cannot be bought or sold publicly. They can only be given away as gifts or transferred internally between employees, members of related organizations like international banking institutions, and so forth. That said, most shares are held by member banks in proportion to their size, i.e. total assets, which gives them a say in monetary policy via voting rights, but not direct ownership or profit participation like other companies' shareholders enjoy. How did it come about? The Federal Reserve System was created by Congress in 1913 with three basic goals: promote a safe, flexible, and stable monetary and financial system, minimize disruptions in economic growth, keep inflation low. The Fed is independent of government oversight. It is run by a board of governors whose decisions can't be overruled by anyone. Why that's good or bad, supporters say independence from politics helps ensure stability, while critics say it makes it difficult to hold officials accountable. Beyond that, most agree it makes sense to have a central bank, whose main function is to make sure that banks are safeguarding their customers' money. But there are disagreements about whether some of its other policies have had negative side effects on individuals or businesses. As mentioned above, a central bank is an important part of any developed economy. Although a country's financial system can be organized in other ways, the US at one point had no central bank. Most countries with advanced economies have them. In some cases, it was deliberately established to help ensure economic stability. In others, its creation took place as a response to instability. The Federal Reserve System has taken both approaches and served both roles over its history. Why was it created? In 1913, Congress passed a law that placed control of our nation's monetary policy into private hands, now known as the Federal Reserve. It was created to stabilize prices, reduce unemployment, and maximize economic output. However, the critics say its policies have been detrimental to American citizens. Learn more about how it works, who owns it, and whether or not you should be concerned. It's good for politicians. If a politician wants to buy votes, they can just print money. You see, inflation is basically free money given out by politicians in exchange for political support from voters. But if too much money is printed without baking, inflation can occur and result in currency devaluation, which has happened many times throughout history. As an example, during Weimar Germany, hyperinflation reached such epic proportions that people carried around wheelbarrows full of cash just to buy groceries. On top of causing financial chaos though, devalued currency also has very real effects on ordinary people, like creating higher prices at stores. What does the Fed do? The Federal Reserve's responsibilities include controlling money policy, regulating banks, maintaining currency stability, managing government payments and foreign exchange, supervising financial institutions, and providing banking services to financial institutions. As of January 2012, there were 12 regional Federal Reserve banks spread across different geographic areas of the country that are responsible for concluding monetary policy and overseeing their respective portions of the nation's payment system. The Board of Governors in Washington is responsible for making sure each regional bank follows its own governance rules, as well as overall policies set by Congress, and it's accountable to Congress. In addition, it has oversight responsibility over certain aspects of how each regional bank conducts its business. Where's all the money come from? The short answer is that it comes from you. The Fed's most powerful tool to affect economic growth is its ability to increase or decrease liquidity in capital markets by buying or selling securities, commonly referred to as printing money. In other words, when the Fed buys a security like a treasury bond, it creates dollars that didn't exist before, in effect generating more wealth out of thin air. So where does all that newly created money go? Most of it ends up in commercial banks, which have accounts with their local Federal Reserve Bank. Commercial banks can then lend those funds out to businesses and consumers who need them, injecting cash into our economy. This is why some critics refer to printing money as monetizing the debt. However, there are limits to how much new currency can be introduced into circulation at any given time. These limits are set by Congress through legalization like the Humphrey-Hawkins Act, 1987. When's a good time to talk about conspiracy theories? Usually, when someone brings up a theory that's popular amongst Americans today, they're met with disdain or eye rolls from fellow Americans who are skeptical. However, I'm guessing you're not like most people these days. You want to learn as much as possible about important issues. So let's take a look at some of today's conspiracy theories. If we go back to when the Fed was created in 1913 during Woodrow Wilson's presidency, in its early years it was largely influenced by J.P. Morgan Co, a private banking firm based in New York City, which also happens to be home to Wall Street. At first, J.P. Morgan Co had complete control over the Fed until President Franklin B. Roosevelt replaced all but one member of its board of directors with his own appointees during his first term in office. Since then, members are appointed by the president in office. Well, according to conspiracy theorists, the Fed is controlled by a small group of elites. This cabal of influential people works behind closed doors to influence American politics and culture in order to make money off us. They do so through many different means, including creating wars, recessions, boom times, and depressions, which they then use to manipulate stock prices and make money off their investments. But is there any truth behind these claims? What do you think? So, is the Fed good or bad for you? Well, just take a look at our economy today. We've been in a period of high unemployment numbers since 2008, which has pushed many into financial crisis. But what's responsible for these issues? Some blame these problems on the government policies put in place during former President George W. Bush's administration, but others have argued that the Fed caused them by intentionally making money tight. When you create more money through various mechanisms, such as printing it or lowering interest rates, it becomes cheaper to borrow money from banks, who also benefit from lower interest rates so they can make more money from lending out large amounts of money to people seeking loans. Perhaps a more democratic and transparent decision-making process in the Fed would help to calm skeptics in this topic. If you enjoyed this video, please don't forget to subscribe and hit the like button.